Hi, good evening. My name is Raphael Aristi. You guys know me from the Cheap Trades Room on WhatsApp. And I'm recording this video June 7th, 2023 at 6:34 p.m. And my motivation for this video is a something that came over my news feed uh, to, in essence, saying a billionaire prophesies um, bull market from now on. And I immediately thought, that's not true. There is no confirmation as of yet. We may be around the corner from a confirmation of the end of the bear market and the end of the correction, but we're not there yet. Not technically and not volume wise. So I'm here to show you that. Okay, so I'm going to switch over from this opening view to a view of this is actually a little bit more than a year. This is a 2-year candlestick view of the SPY ETF, which represents the S&P 500. The S&P 500 is the largest index in the U.S. market. It has over 3,500 symbols in it. So to give you a comparison, the Dow Jones only has like 35 symbols in it. And all the Dow Jones symbols are in the S&P 500. Then you have the Russell 2000, which are mid-sized corporations. They're also in the S&P 500. So the S&P 500 index is the mother lode. And this chart is the S&P, the SPY ETF. You can look that up if you want. ETF. ETF. Exchange Trade Fund. So this is like a stock that represents, because you cannot buy shares or anything in the actual index. So this is where you can buy shares of the S&P 500 and buy option contracts. Okay, so here we go. First of all, let me demonstrate to you the type of cursor that I'm using. And this is a horizontal cursor. Okay, you can see it moving. I know the video is small, but you can see the movement here. Okay, so the reason I chose a horizontal cursor from the regular arrow is that what I'm going to show you is from a linear point of view. Okay, over here to the left is a red circle, and within that red circle there's the highest candlestick is a red candlestick, and I don't know if you can look over to the top right where it says Wednesday 05 Jan 2022. Okay, that's 5 days after New Year 2022, and the high for that specific day was 477. The S&P was for each shares of this S&P ETF was at that time reached a high of 477.98, $477.98 for each share of the S&P SPY ETF that represents the S&P 500. Okay, so that turned out to be the high for 2022. And the high for 2023. So from that day on, as you can see, it was a downturn, crashing, bouncing back in a retracement. This is daily coming down again and doing a small intermediary retracement there, and then coming down again, and then bouncing up in a long retracement. Let me move this message box a little bit further up. Now, this message box says is pertaining to this black rectangle, tall rectangle here. But before we get to that, I want to show you the drop, the furious drop in the SPY ETF. It just kept going down, 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 and then when it got to about 371.04, it did a retracement trying to change the trend. It did not complete that, and it got up to like 429.41, and then it continued down to the bottom. The bottom being 350 with 5 cents per share right here. This is marked by the A with the arrow indicating towards this long green candlestick here. Okay, let's hold that thought, okay, because I want to present to you the definition of a correction. How do you know that the market is in a correction? Well, if you go to investopedia.com and other websites, just look up, do a search like market correction, okay? And it'll tell you that a market correction is when the market drops 10%. Okay? So at 10%, that was 431.92. I have it indicated right here. So once the volume, so this is it right here in the horizontal cursor. This is 431.92 right here. Okay. It reached it here, dropped down to 410.64, did a little bit of a retracement, tried to come back down to continue the descent, and then it shot up on this long retracement. This is really long. This was an attempt to have a comeback. Okay, so up until this point, this is not a correction. This is a intermediate retracement. Very long, faceted retracement. Okay. On the other side of this upward retracement, so we have down retracement here, an upward retracement here, and then a down retracement here, a little upward retracement here, and then a down retracement which didn't reach the last low. So, and then it bounced back up in this long retracement, and then continued down, okay, again past the 431, 92. What does it say up there? Yeah, 431.92. And that's when it was flirting with the confirmation of a correction, 10%. And then it made a little bit of an attempt here, blah, blah, blah. This was around 21 April. So from January 5th to April 21st, that's what? 4 months. And the market could not come back up. It was in deep doo-doo. There were not enough buyers, whatever was happening in the news and the government reports and stuff was people got scared, the big market movers got scared, and there wasn't enough buyers to convince, there was not enough good news to convince these people that they should stay in the market. So at 431.92, finally it broke that confirmation point, and it just dropped like a brick, okay, down to 384. So remember, this is like this is 100, and so 477, 31 to 364. Now they tried to play this down, okay. This is, you know, they call it points or whatever. I call it, I don't use industry terminology because it's deceiving. This is money. This is the diminishing cost of each share in this ETF. Okay, so the low here, I guess it was here, 369, so 477, 369. This is $112 decrease in each share of the SPY ETF. That is horrendous. So it made an upward retracement attempt down, and then upward again down, and then it made this tremendous attempt to come back and get itself out of the confirmed correction. I mean, meanwhile, nobody's talking about this at that time. Nobody's talking about the seriousness at that time. It tried to do this here at 426, came close to getting past that 431 confirmation, 431.92. It did not do it, and then it just dropped again, okay, down to the low, which was 356.30. That's the low. That's the rock bottom. Okay. Now, you're asking, when do they call this a bear market? The 431 confirmed the correction, 131 per share. The bear market, I believe, was 30%. And we're beyond that. So here we have an attempt where I'm in this black rectangle, which I will explain to you what that is. Right? The retracement up, little down, retracement up until 395.40, still far away from that 431.92. Retracement down, and then an upward retracement up, making the attempt to get out of this correction and actually a bear market. Okay, so 411.43, and then it dropped again. So that was an attempt. When I saw this, I saw a what they call a 1, 2, 3 change of trend. So from here on, get this thing out of here. From here on was an attempt. This was rock bottom. We're already in the bear market. Okay, I'm not going to go into when the bear market was confirmed. So this I saw this chart pattern, and I noticed that it was a 1, 2, 3 change of trend, upward change of trend. chart pattern. So this is what I did. I drew this. The bottom is A. B is the attempt. That was the highest retracement. And the beginning is C. The beginning of this 1, 2, 3 change of trend. Now, what indicates the change of trend is there is a line here, a trend line above all these lower highs. I took it out because it was complicated. Now, when the trading reached like the first high above this lower high, when the trading reaches that, that's the first spot. And then it drops down to this retracement, the second spot, I'm sorry. And then, okay, I'm sorry. I don't know why but this is the way they told, I was told to draw it. And then, so from the first confirmation of an attempt of change of trend was above the first high above this trend line that's not here, downward trend line. So this is this right here, 374.80. And then it continued. Oh, so in other words, this confirmed the fact that there was a 1, 2, 3 trend change, a chart pattern forming. So the next high would be this point here, like 390.39, and then it dropped in the retracement to this point number 2, which is 368.79, and then from there on up, okay, past the number 3 point, I'm sorry, and continued up. Now, the confirmation of this 1, 2, 3, a change of trend chart pattern is when this trading action reaches 417.73. Write that down. So the confirmation of this trend change from a downtrend, bear market, and all of that to an uptrend was when the SPY reached 417.73. That's right here. Okay, I'm going to put the cursor right on there. Okay, 418, 417, right here. So you can see this top of the Bollinger line, the top border of the Bollinger line here, and then it just dropped on this retrace. It didn't quite make it to the confirmation. It dropped down on this downward retracement, made another attempt. I think it did it for like 1 hour over here on February 2. Now we're past a year. Okay, January 5th, 2023. Okay, the market was in an attempt. It was on this upward retracement here. So this is a year right here, okay. You can see the black date timer down at the bottom of this chart, Thursday, 5 January 2023. That was a year from the time that this crash began. It was still struggling. The market was still struggling right here. Okay. So then made another attempt. I put, it was 1, 2, 3, 4. I recorded 4 upward retracements. Boom, it didn't do it. It didn't continue on up to, it was 413.67 on this upward attempt, on this upward retracement. It didn't reach the 417.73, and then the bottom just came out again. Boom, it dropped down to 381, and then another attempt It dropped down. So now we have like an upward multiple retracement attempts to get out of this market. Okay. It was supposed to have happened here within this 1, 2, 3 change of trend. It didn't quite confirm it. So it just needed to make whatever amount of attempts the market needed to make to get to that 417.73 point, which it did. It did for okay 414. It did it on, here we go. It did it on May 26th. Short time ago. It confirmed that 417.73. Okay. So now we need to go to a close-up of this, because now, you know, we read this whole thing, and it's from May, January 6th, January 5th, 2023 to May. That's what, another 17, it's almost a year and a half. Okay. So let's change this. Sorry. Let's expand this to present day, where you get a close-up. All right, so for April 18th or 18 April, here it is, 418. Okay, so 414, not yet. So on 418, didn't do it. When the market reached that 417, or surpassed that 417, it reached 417.62, which it's supposed to be 417.73, right? So it didn't quite do it here on May 1. It did it. I mean, this market struggled. These people, there were not enough buyers. The market, when people say the market, these are real people. Okay, so 420, 418, 417.35. So between the low of 417.25 or the high of 420.72 and the low of 417.35, there was a confirmation of a change of trend on this day, May 19th, 2023. It didn't last long, and then the downward retracement came back up on May 26th, another attempt. So this day, May 26th, this was 1, 2, 3, 4, 5, 6, 7, last week. Okay, May 26th last week, that 417 was confirmed. So we are officially confirming the change of trend from a downtrend bear market to an uptrend. It was done on this day for a little while. Then it dropped again, boom, and then on June 1, it did it again. Then we have this gap here between June 1 and June 2. There's a gap. See? It jumped up in price. So the high here is 428.74. This was June 2. June 3rd, Monday, this is Friday, over the weekend, the open was 428. Okay, confirmed, change of trend. Whoopie whoopie doo, 429 high, low 426. We're cranking, close at 427. So the high 429.62 was recorded. Tuesday, yesterday, the open was 426.67. Still confirming the change of trend from a downtrend to an uptrend. Not out of the correction yet. Big difference. Change of trend, yes, but we're still in the correction, market correction. And this billionaire says, oh, from here on in, this is a bull market. This is not a bull market. The bull market is not confirmed, and I'm showing you that. Okay, so today, June 7th, 2023, the open was 428, high was 429.62, low was 426.11, and closed at 426.55. But what is going on here? I pause, so let's see if you guess. There is resistance at the high of 429.62. Oh, two candlesticks. Let's see if tomorrow, because the close today was 426.55, very, very, short range. And we had a lot of volatility, especially in the afternoon market, as you saw, and it was hot to trot. If you were ready and quick draw, you made a lot of money in the afternoon with these short trades, 60, 40, 50, $60 per contract. And the way to make money on that is buy multiple contracts from 10 to 20 to 30, 40, 50. So you do your testing with individual contracts, see where your confidence is, see where your resistance is, see where your fears are, one or two contracts. And and then then you increase your contracts. Okay, but let's take a look at this resistance 2 days in a row. I got this line here. This is a red trend resistance line trend. Okay, look. I'm going to put the cursor over this. This was June 5, the high 429.62, and today was the same high. It did not push beyond. That's resistance. When you have consecutive, not consecutive, but close to consecutive highs. That's resistance. Okay, in an upward mild, I guess. I wouldn't call it a trend, like an upward trend. It is a confirmed upward trend because it is past the 417. Okay, but it's weak. And another thing I want you to consider, we have a gap between January 1, okay, June 1 and June 2. Okay, you know what this means? Okay, it's a proven rule in intraday trading, and that all gaps must be filled. So the trading has to come down at least to 421, 420 to cover this gap before it continues on up. So we're back down. We're going to be back down, maybe, 420, maybe the 421, 420, maybe the high 14, 419, but maybe not, like 420 would be the low here. So we, you know what this is $8 difference. So maybe you can, this would be kind of sort of an opportunity to swing trade, because this gap must be filled. That's a tested rule. Okay, you can take that to the bank. I can't tell you when, but it's gonna happen. And based on this resistance here, the same exact resistance point between these two candlesticks tells you that that's what's happening. Number three, the trading on the 6-month chart was over. It was outside the top Bollinger. That means it was heavily oversold. So we had two candlesticks. This one here, June 2, was heavily oversold. Okay, and then the next day, the downturn started. You could see it was still oversold, but you know there's the sellers are taking over. They're getting out. So yesterday we're within the Bollinger line. Okay, we're cool, but this is another attempt today to continue the uptrend, but it was not possible. So we have several pointers here to be aware of and be careful in our day trading options contract buying. Derkeys likes to swing trade. I used to like to swing trade. Uh, I'm what I do now for many years. I don't diagnose. I don't project anything past 10 minutes. But this here is a unique thing. Okay, this. Let me just do this. Let me just, give you kind of like okay, so in order to amplify the situation here, we got the gap here, and then we have oversold candlestick here way out of the Bollinger. When a candlestick jumps out of the Bollinger like that, it doesn't matter whether it's intraday or daily or monthly or whatever, it means an oversold condition, so it's got to come back within the parameters of the upper uh, the upper parameters of the Bollinger. Okay, and then it stayed there yesterday, and then today it was very weak. It matched the high yesterday. So this is resistance. So there's several factors that you have to consider, okay, for tomorrow in your trading. Whether I would say that it's a good plus to swing trade this. Okay, however amount of contracts your tolerance is. I'm not going to tell you how many contracts to trade, but it could be tomorrow, it could be the day after. If you want to buy a Friday expiration contract, I think that would be more prudent than buying the next day. Let me see. Today is the 7th. So Wednesday, the end of Wednesday. So tomorrow, on the open, well, you can't buy it now. So the 9th would be like the latest expiration. If you do the 12th, then you don't know what's going to happen on Monday over the weekend. All right, that's like gambling. Okay, so tomorrow, swing trade tomorrow, Thursday to Friday. If I would have done this analysis yesterday, or even, well, no, because it didn't. These two candlesticks would not have appeared today. Maybe if I did this morning, I would have seen the high, and that would have given me an indication. I would have seen this gap here. Anyway, look. So this is where I'm at. Okay, this is a kind of like a up to bringing everybody up to date on what's been happening from the time that this market got itself into trouble, confirm a date of correction, and then a bull market, and then a bear market. Okay, so the correction, it was still in the bull market when the correction was confirmed, okay? So the bear market came into view, I think it was a 30% drop. Okay, and that was serious stuff. they don't talk about how much it dropped. Okay, I mean, this is 100 and something, what they call points. They really minimized this whole thing. They didn't want to scare people, but it was serious. Okay, serious. If I show you a 10-year chart, maybe I'll do that over the weekend. Okay, to give you even more of a wider perspective on what's been happening. This is a false upward breakout. I'm gonna give you a little gist. The SPY, the market overall, is this like 400 points or whatever, 460 or whatever. This is a false inflated price of the market. Okay, the market has been in a bubble for years. Okay, look, let me do this. This is false. The market should not be at $429. Okay, they call it points, but I call it, what it is. This is money. Okay, so I'm giving now this. Look at this. It's like you can't see details, but just look at. I'm gonna get these things out of the way. So I'm only showing you like the top part of the chart. We got the volume, and we got our slow stochastic. Okay, so look at this. So this, okay, 10 years. Okay, it's like all blurry. Okay, so let's do all. Let's go further. Right. So this here was the 147 per share. Okay, this was October 2007. Remember 2008? Boom, 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 boom. That was this. And they thought that was like, they still thought, oh, that was huge. That was huge, So it was, nobody remembers this. 152 high, okay, to 78, right? Or 75. That was the drop. 152, so 52. So it was like $75 drop in the price of the S&P Y ETF. This was okay, 350. Okay, do the math. You want me to do the math for you? Okay, do the let's do this. It's outrageous, and nobody was talking about it. We're talking about the great crash of '08. This crash was freaking horrendous. Like, it was beyond comprehension. Okay, so 477, I'm going to round it off, minus 350 something. Okay, $127 drop. Okay, so let's look. What percentage of the high? Okay, I'm going to show you right now. 477. Okay. Okay, this is, like ballpark. The percentage was 26%, almost 27% of the market. The correction was at 10%. Okay, this was a 26%, almost 27% drop in the market. Okay, so let's do this. So this was like 152, let's say, to 73. Okay, so 152. This is 0708 minus what? 73, right? Was that it? 73? Yeah, we'll take that. All right. So that was like a 79-point drop divided by 152. Okay, that was a 51% drop. But, so they're talking about that being like the largest, right? percentage wise. But this was the largest in point wise. And it looks less because the market is overinflated. The SPY, the Dow, or don't forget, okay, you got to remember that our trusty government, okay, that we all love, they held up this whole ascension here was the Fed buying up the market, okay, with inflated money, like worthless dollars, because they just kept printing and printing and printing trillions and trillions of dollars. Today, a dollar is worth 6 cents, 6 cents. So that's the truth. So what's the hidden inflation? That's the inflation. Okay, the inflation is like 93%, 94%. Not what they're saying. Because the truth of the matter is, okay, this thing should have gone up a little bit at a time, you know. Okay, 178, you know, a little retracement here, you know, 178, a little retracement here. And then we have this so-called correction here from, this was 2020, okay, which this thing started in 2020, and then in the same year 2020. So it was March 2020. This was a massive correction, January 2020 to March 2020. Okay, it dropped from to already inflated 333 to 23, almost 100 points here. Okay, and this is, as I said before, what it was. This is all inflated. This is all what do they call that? Paper house. You know, a house built on water. You know, it's going to sink. This is a straw house market. That's the reality. This is why I trade options. Okay, because this is not going to be the only issue that's going to befall us. Definitely not. So as far as investing and stuff like that and stocks and share, I would not do that. I would stay away. I would go into you know, stuff that is real. Okay. What do you call that? You know, fertilizer, minerals. What do you call that category, that index? What do you call that index? Basic materials. Wow. There's a sector. There are 11 sectors in the economy. One of them, the biggest growth from that time until now has been the basic materials. Okay. Fertilizer, anything that comes out of the ground, you know, mining, trace metals, everything that we use in telephone. China controls that. You know, these precious, you know, titanium and all that stuff. Gold, silver. Gold now has a base of $2,000. It's not going to go down below that. So you want to diversify your portfolio. Get out of these flimsy stocks which are inflated. This is like you blowing air in a balloon, and okay, what is the balloon going to do when you let it go? It's going to rise because it's got air. Where air doesn't, you know, we need it to breathe, but it's not solid. Okay, basic materials has been the fastest growing sector in this economy since that time. Since the market was at like 175, 176. So this is it right here. This is the whole picture, okay? And sorry if it was too long. I don't know how long it was. And I hope that Okay, I'm back to this. Let me see if you actually saw a view of that close-up from your point of view of this recording. So I'm going to go to OBS and see if it worked. If not, I'm just going to have to record. Okay, yeah. So you did see the close-up on that. And that's where I'm going to end. Okay? So I'm going to put this up on WhatsApp. I hope you watch it and get yourself educated and bring yourself up to date on what's happening. Okay? That's all I'm going to say. I'm not going to down my, bad mouth any other investments that people are doing out there today with no substance whatsoever. There are a few out there. So anyway, I don't know how long this is, but I'm going to stop recording. And this is Raphael Aristi bringing you a very lengthy, up-to-date view from the get-go, from the time that this government, and I'm not bad-mouthing our government. I love our government. They do a lot of good stuff. There's the most powerful country in the world, and we live in a magnificent society. But as we all know, everybody, everything has a plus and a minus. And everybody wants to shoot down the USA. But everybody also wants to come here. So, let's focus on the greatness of this country, of this nation. Okay? Is the market trend up? The answer to that question, yes. And on that note, arrivederci, sayonara, from Wall Street 60K ATM. How could somebody ask me one time, okay, how could you use that, 60K ATM? Well, I'm going to tell you that I can use it because my biggest trade was a swing trade with potash around 2010. 4 contracts, $200 each contract. Okay, so the next day I woke up to $67,000 profit. Okay, one account at $27,000. My trading partner at that time in her account, and a separate account for each one of us for expenses. I think I don't know. I don't remember what that was. But yeah, I can, and I got proof. So anybody doubts, I'm not, out there proving this or anything, but yeah, I know how to do $60,000 games doing what I'm doing. It's not perfect, but I can claim to that. So on that end, take care. Bye-bye. So long. Farewell. This is Raphael Aristi. Family calls me Leo. And ciao, ciao.